Hi everybody, my name is Chris Donovan, and I'm a sales associate with Lightspeed Financial Services Group. In today's brief video, we will be discussing margin interest. Before we get started, it's important to discuss what margin exactly is and what having a margin account allows you to do. A margin account allows a trader or investors to borrow funds to trade securities in the secondary equity, options, and futures market. Margin accounts can be used to buy, sell, and short sell securities. The amount of money that can be borrowed and the terms are governed by the Federal Reserve, the Securities and Exchange Commission, the Financial Industry Regulatory Authority, and Lightspeed Financial Services Group. To be considered for a margin account, you must apply at account opening or complete the margin application and agreement. The account must maintain at least $2,000 in equity through the deposit of cash or marginable securities. Margin interest is based on the amount of money borrowed over your total equity. The interest rate is charged per day, annualized. The margin interest rates are subject to change without notice and can be found on our company website. Each account at Lightspeed Financial Services Group is self-directed, and the margin loan is collateralized by the account's equity. To access our webpage about margin rates, mouse over the Pricing tab at the top of our website. Move your mouse down and click on Margin Rates. You can also just type into the address bar of your web browser, lightspeed.com/pricing/margin. As you can see here, the margin rate offered by Lightspeed is 7.5%. This is our annualized and initial rate. The formula for calculating the cost for you is the amount you are borrowing multiplied by 7.5% divided by 365 multiplied by the number of days you are holding or borrowing the money. So let's say, for example, I'm borrowing $10,000 on margin. To calculate the cost to me for borrowing that money on margin, that would be 10,000 multiplied by 0.075. That gives you 750. Next, you would divide that number by the number of days in the year, 365. This gives you 2.054. Lastly, you would multiply this number by the number of days that you are borrowing the money for, which is 5. That gives you a total of 1027. So the cost of borrowing $10,000 for 5 days is $10.27 in margin interest. That's all for today. I hope you found this video helpful. Thanks for watching and have a great day.